Welcome back. You're watching First Trades live on ET now. 41 points up for the Sensex. Nifty also struggling to stay above 5,300. 23 points up for the Nifty. Nifty futures for the September series are still trading at a premium, but let's hope that gains are here to stay because globally things are not looking all that charged up. Jim Rogers, chairman of Roger Holding, joins us now. Jim, good to have you back on ET now. Thank you for joining us, Jim. Nothing big has come out from the Jackson Hole meeting, but do you still expect Fed to announce a QE3?
I don't know if they'll announce it. I know they're going to print more money. They already are. If you look at their balance sheets, you'll see that the assets are, that something's happening. The assets are building on their balance sheet, and they're not coming from the tooth fairy. So whether they announce it or not, I don't know. You know, they're a little bit embarrassed because they announced QE1 and QE2, and it didn't work. So they may try to disguise it. They may not. They may just continue to do it without getting egg on their face again. But they're going to print money. They're all going to print money. It's the wrong thing to do, but that's all they know to do.
So, Jim, are you expecting more shocks from the Eurozone, or is the worst behind us?
Well, the worst may be behind us for this week, but no, there are going to be more problems coming out of Europe. You've got countries that are essentially bankrupt. You know, nobody is dealing with the problems in Europe. You look at every one of them, and they all have higher debts in all of their projections. Maybe Bulgaria, one or two, don't have higher debts in their projections, but everybody's got increasing debt. The solution to too much debt is not more debt. So no, you're going to have plenty more problems coming out of Europe.
Jim, what's happening in China? Shanghai Composite is at a fresh 3.5-year low. Chinese PMI data was not all that encouraging, and Chinese consumers, either they are confused or they are getting exhausted now.
Well, China tightened up for 3 years. They started back in 2009 or so to try to kill the inflation bubble and the property bubble. Rightly so, in my view. Now they're starting to loosen up. I would not loosen up yet if I were China, because they need to kill inflation totally, as far as I'm concerned. They need to totally pop the property bubble, as far as I'm concerned. But I'm not China. They're going to do what they want to do, and it looks as though, since they have to answer to the Chinese public, they're going to start loosening up now, which is too soon, if you ask me.
Jim, so what about India? Because we're seeing the GDP growth slowing, inflation showing no signs of easing, and the central bank refusing to cut rates till inflation eases. It's really, you know, like being stuck between a rock and a hard place. Can India overcome its sluggish growth issues?
I doubt it. India, for some reason, gets better press than the reality. I still haven't quite figured out the Indian press. You know, the debt to GDP in India is now over 90%. The studies show that when you get that high a debt ratio, it's very difficult to grow in a dynamic way. I'm not a fan of India. In fact, I'm short India. So I don't think you're going to see a lot of good news coming out of India.
So, Jim, what will make you positive on Indian equities?
Oh, collapse. No, if we could see stock markets around the world collapse, then I would have to get more interested. But at the moment, some stock markets are, I mean, the United States stock market is within striking distance of all-time highs. That's not a time to get very excited about things. But if and when some stock markets, big stock markets around the world collapse, I'd have to start getting more interested. For Japan, for instance, which is down nearly 80% from its all-time high, I'm looking around in Japan. Certainly rather look in Japan than in other places.
Jim, gold prices have seen some strength in the month of August on stimulus hopes yet again from U.S. and an expectation of further monetary easing by China and more bond buying by the ECB. What's your expectation from these central banks, and how will it help the precious metal?
Well, unfortunately, all central banks know to do is to print money, most of them anyway, and you're going to see more money printing, more debasement of currency, and therefore the price of gold will go much higher over the course of the decade. Whether it goes up this year or not, I don't know. The situation with gold is gold has been up 11 years in a row, which is without a down year, which is extremely unusual. I do not know of any asset that's been up 11 years without a down year. So gold is correcting. It would be normal for gold to continue to correct and have a down year. That's what markets are supposed to do. Whether it's going to do that, I don't know. But I do know that gold is going to be much higher over the decade.
Jim, now silver prices have appreciated by about 13% in the month of August, and gold has appreciated by only 3%. So within silver and gold, if you have to pick and choose, which one would you bet on?
Well, if I were investing in either, I'm not buying either at the moment, but if I had to buy one, I would prefer to buy silver. Silver is 40% off its all-time high. Gold is only 10 or 15% off its all-time high. So on a historic basis, gold is much cheaper. Silver is much cheaper than gold. So if I had to buy one, I would buy silver, not gold.
Right. Jim, so the continuous outperformance has come from crude oil prices as well, which are up nearly 8%. How do you see the run-up in prices, and what's your view on the future outlook?
Well, the surprise with oil is going to be how high it stays and how high it goes. We're running out of known reserves of oil. There may be a lot of oil in the world. If there is, we just don't know where it is. So prices are going to stay high and go much higher. If America goes to war with Iran, they're going to skyrocket. If there's a big surprise, if Spain suddenly goes bankrupt out of the blue, then oil will collapse in price. If it collapses in price, I would suggest you buy more. If there's anything that makes it go down, I would suggest buying it, because until we find a lot of oil, prices will stay high and go much higher.
Right. Jim, so what impact do you see high crude prices will have on Asian economies, especially economies like India and China, which are dependent on crude imports?
Well, you know, India has inflation for its own reasons, not because of the price of crude, although the price of crude certainly contributes to inflation everywhere. Any country which has to import energy suffers when the price of energy goes through the roof. On the other hand, countries which sell energy, Malaysia, for instance, benefits when the price of energy goes higher. It just depends on whether you're a buyer or a seller. That determines whether you're doing well or suffering.
Jim, China, while still is the biggest consumer of commodities, has been erratic in its trade data. Do you see a slowdown coming in that region?
Well, China is not the largest consumer of commodities. The U.S. is certainly the largest consumer of most commodities, and Europe and America. But China's big. You're exactly right. China's provided a lot of growth and demand. China has been slowing down. For 3 years, they've announced repeatedly, you know, we're trying to slow the economy, to do something about inflation, to do something about the property bubble. Now they seem to be loosening up, or beginning to loosen up again. I don't think they should loosen up at this stage, but I'm not China. They don't have to listen to me. I suspect you will see China loosening its purse strings, starting to spend some of its money. Remember, China saved up huge amounts of money for a rainy day. Once it starts raining, they're going to spend that money.
Jim, what about sugar? Given the way how we've got a poor monsoon in Brazil and India, are you hot on sugar as well?
I have no idea what's going to happen in 2012, but again, sugar is going to be much higher over the course of the next decade or so. You know, sugar is down about 70 or 75% from its all-time high. Sugar's been amazingly depressed in the past 3 decades, 4 decades. So sugar's going to go much, much higher before this bull market's over. But what happens this year, I don't have a clue.
Are you bullish on commodities overall, Jim? And what makes you still, bullish given the gloomy economic outlook as well?
The commodity bull market is going to go on until there's a lot of new supply. You don't have much new supply in most commodities. Commodities are determined by supply and demand. You will certainly have corrections. You have corrections in all bull markets. In stocks, which went up from 1982 until 2000, you had several corrections. In 1987, stocks went down 40 to 80%. It wasn't the end of the bull market, and you will certainly have commodities corrections, but you know, we are going to have shortages. If the world economy gets better, we'll have big shortages. If the world economy doesn't get better, governments and central banks will print more money. It's the wrong thing to do, but that's what they do. And that, of course, when currencies are being debased, the best way to protect yourself is with real assets.
Jim, there are 3 key classifications for commodities: precious, industrial, and agri. So out of the 3 groups I mentioned, which is one group you're bullish on?
I own more agriculture than most other commodities. because the prices are still astonishingly low in some cases. Agriculture has been in a terrible situation for 30 years now. Agricultural prices will be the best performers, I think, I hope.
Okay, Jim, always good to have you in the show, and appreciate you taking the time out and joining us today on ET Now.